Know the difference with Annex Wealth Management? After getting $80 billion from last year's Inflation Reduction Act, the IRS is poised to make good on its long-standing pledge of paying more attention to taxpayers who make more than $400,000 annually. And that's the bad news. More bad news is the agency is going to focus on, quote, segments of taxpayers with complex issues and complex returns where audit rates are minimal today, such as those related to large partnerships, large corporations, high income and high wealth individuals. Joining me to talk about this, Eric Strom, Financial Planning Manager, CFP, and an EA, part of the stellar financial planning team at Annex Wealth Management. Welcome, Eric.
Thank you, Danny.
More than half of the agency's new funding was allocated to enforcement, and the plan makes it clear that the current administration wants the IRS to increase audits of wealthy individuals and large corporations. One question is, when does this all start? How long will it take?
Well, the IRS still has to hire and train agents, and that takes time. Many believe that 2022 returns are not likely to be impacted with increased audits because, remember, auditing has a 3-year statute of limitations. So many experts believe the 2023 returns that we're seeing will potentially be impacted by this because by that time, it's possible to have onboarded and trained a lot of new agents.
The word audit strikes fear in the hearts of most people, doesn't it?
It does.
The IRS refers to, quote, making $400,000, and that apparently is not a tax term. Where's the confusion going to come in there?
Well, this term needs to be more defined in a measurable way by the IRS because think about this. Someone could have millions of dollars in capital gains, but then also millions of dollars of capital losses. So they may have a net taxable income under $400,000. So did that person, quote unquote, make less than $400,000? We don't know. And we need clarity to really be able to help advise in that area.
We're watching this carefully. Eric, do you know, what are some of the possible tax issues for our wealthy clients down the road?
It's common for business owners to save, as one example, certain types of taxes, such as payroll taxes, by using a strategy such as shifting some of their income from salary to business distributions. That type of planning, that's where it's likely that we might see the IRS cracking down on business owners who may, for example, take too small of a salary and take too much of their distributions, which does save in payroll taxes. So all that to say that for people who have that type of business structure, as one example, could be where we see more scrutiny.
How about pass-through tax breaks?
Many wealthy taxpayers have pass-through income from businesses. So pass-through means the taxes are actually paid at the individual level. And entities that have passed through also can be providing losses, which can be very beneficial too. And there's historically been a very low audit rate on these types of business entities. And it makes sense if you think about it because it's very challenging to audit these entities because they're complicated. Most of the audits that take place are very simple audits of the earned income tax credit or other very simple matters that can happen all by mail. But many of these pass-through audits are so complex, that's where really they're putting that emphasis. So it's very likely we're going to see more scrutiny with pass-through entities.
Is that the same then with deductible business expenses?
Well, it's possible that we're going to see more scrutiny for deductible expenses for businesses to make sure they're legitimate. This is the reality. Some business owners do deduct personal expenses as business expenses too liberally. Maybe there have been times in the past where you could get away with some of those more aggressive type things, but it's very possible we're going to see more scrutiny of deductible business expenses moving forward with this level of staffing.
Not a time for risky tax moves. The move is not to somehow find a way to get your, quote, income under $400,000, right?
No, I think that the increased auditing is going to make it less likely that errors will continue to go undetected. But I think what's key here is you need to have careful consideration when it comes to more aggressive approaches. And the bottom line is you need to feel comfortable defending any kind of income or expenses that you're reporting. At the end of the day, that's what counts.
Well, actually, the lightning rod here is that this whole thing is pretty political, right?
Yes. IRS enforcement has become a very political issue. You've got Democrats in Congress who are supporting scrutiny on the wealthy, and then you've got Republicans who are indicating an intent to claw back the Inflation Reduction Act funding from the IRS because there's questioning of how the IRS is going to use these funds. So we could see the enforcement environment easily changing again, and going into the 2024 election season, the issue of IRS funding and enforcement will probably be a pretty hot topic that we're going to see in the news.
It sure is, folks. The story's still playing out. Our financial planning and tax team's going to be laser beam focused on this. Eric Strom, Financial Planning Manager, CFP and an EA at Annex Wealth Management. Thanks for your insight.
Thanks, Danny.